Okay, so I tend to have a lot of conversations with old friends in particular about money, finances, because obviously I do wrestling with finance and I've gotten into investing in the stock market over the last 4 or 5 years or whatever it's been now since I started doing it and actually taking it seriously. And I try to give advice to them and they ask me for advice, but you know what happens when people give advice. If you give good advice, it's a very good likelihood that the people that you're giving advice to are going to hear it. They're going to think it sounds good, but they're not going to listen to it. And in particular, this past week, I had a conversation with a friend I haven't talked to for a while, and we were talking about her finances and a potential new job and all these other things. They were going on about what they were going to do with all this money if they got this new job. And they started talking and talking and talking, and I was like, whoa, wait. And that is usually not a good way to engage people in conversations, because the second you do that, they kind of turn off. So I decided to do this video in a more calm and measured way in order to get my point across to not only them, but to everybody else out there who may be doing what I call investment procrastination. Now, that may be a term that actually exists, or maybe I just made it up, but there is a big thing called investment procrastination that affects a lot of people. Then you know it. You might be one of those people that do it, and they go, "Yay, I'm going to invest. I'm going to get in the stock market. I'll get a Robinhood account, or I'll go on a Coinbase. I'll do that later. All right, now I got to do this X, Y, and Z, and I want to buy a new TV, or I need to pay off this, and I need to do that." And people like myself come in and say, you need to do other things first so you can get these things later. So in this video, I am going to talk about investment procrastination and kind of a way to kind of change your mindset into getting out of the I'll do it later phase and into I really should do this right now, because given what's going on in the US economy, you really should do it right now. Now, as always, this being YouTube loves that algorithm. It loves its like button. You can go hit that like button right now. Help the YouTube algorithm let other people know about this video who might be suffering from investment procrastination themselves. And maybe it'll enlighten them. Maybe it'll spark them to take that very, very hard step. At the very least, you could just help out the video and help out the channel. I definitely appreciate it. So what really leads people to investment procrastination? Well, a lot of times from what I hear and from what I experienced when I was younger, remember, I've started investing later in life. I should have done it a long time ago. I should have done it way back in the day. And I kick myself all the time that, man, I'll be so much farther ahead now than I am right now, even though I'm doing pretty well. And I kind of take myself back to that when I talk to people and they tell me, hey, I like to do some advice, and then you give them advice and then they don't do it, and I'll do it later, and 6 months goes by and they still haven't done it. I remember what that felt like. I remember going, oh man, yeah, I know I should put money away. I know I should get a savings account. I know I should buy some stocks and invest in the stock market. I know maybe I should buy some crypto or whatever. I've helped people out with that. I've gifted people crypto. I've gifted people stocks. Even in these videos, I help some of you guys out by giving free stocks away, literally free stocks away in the description box from Robinhood and Webull. But even still, some people they won't do it. And a lot of it is fear. It's because it's a complicated thing. And that's part of the reason I'm doing Wrestling with Finances, which is the YouTube channel for people who've struggled with finance in the past and look to do better with it in the future. The reason I'm doing this channel is for people specifically like that, like how I was 10, 15 years ago when I knew I should get into this stuff, and I kept putting it off and putting it off and putting it off. And it was the fear. It was the fear of that this is complicated. There's all these terms. There's all this stuff. Should I invest in Bitcoin? Should I invest in Ethereum? When to invest? Should I wait till this happens or that happens? And now there's inflation, and now there's a recession going on. Is it good now because everything's dropping and losing money, and that psychologically affects you? And all of these things go into why people don't immediately invest into the market when they should. And yeah, I know Warren Buffett and Berkshire Hathaway lost 40 some odd billion dollars this last week, but you have to remember and you'll hear this from every person who's in personal finance, almost everybody in personal finance. There's some people who don't agree with this, but one of the things that you always want to do is dollar cost average. It doesn't matter what the market is doing. You have a set amount of money that you're going to invest either every day or every week or every month, and you stick to that schedule and put your money in these buckets. And over time, as you can see, the stock market typically goes up. Yes, there's going to be weeks or months or even sometimes years where the stock market is down and you lose money. This is one of those times with a recession and inflation going on, but it typically does recover. In fact, my portfolio, which was about a month or so ago down like 20%, is now back above 10%. Now, I could have sold all that stuff off when it was down at 24%. I had lost 24% on all my investments and got, this whole thing is stupid. I don't know what I'm doing. I can't win. Why can't I win? I'm not going to do it. I need to get out now before I lose everything. In the moment, that feels like it's the thing to do, but if you take the time to stop and think, it's the most irrational thing to do. The saying goes, and I've brought this up before on this channel, that fortunes are made in recessions. And right now, with the recession well, wait a minute, we can't say it's a recession because the White House says it's not a recession. Regardless of whether or not they're going to change, because this is what these people do all the time, they change the definition of things, of words, to mean something that they don't mean, to make themselves look good. It's one of the plagues of modern society right now. But we've had 2 consecutive quarters of negative growth in GDP. Whether or not that officially counts for a recession or not, it doesn't really matter for what I'm talking about right now, because what I'm talking about right now is everything is down. This is one of those periods when you look at a chart that you go, I want to buy in. But psychologically, a lot of people look at it and go, I'm going to lose money. I don't want to put money in, when that is the exact opposite of what you should do. If you buy in now, more than likely, with what the Fed is doing to kind of combat inflation and kind of to get us out of this recession, which we probably are already out of right now. It's kind of funny how the numbers are like 3 months behind. So even though technically in some cases we are in a recession, there are also signs that we might already right now be coming out of that recession. So even though we just got the news that we were in one for the first half of the year, the second half of the year might be better. But regardless of that, the thing that you want to keep in mind though is that eventually these things will go up. And unless you really, really think that the entire world is collapsing and the entire economic system worldwide, because we are in a worldwide economy, even just looking at the US stock market, if you think the entire world is going to collapse and all of our financial markets are going to decrease, then yeah, but most likely we're not there yet. So with that in mind, and again, this is back to try to rationally think about this whole thing. If you kind of get that in mind that, okay, the market will go up again and it's at a down point right now. So if I buy in now, the money I'm investing now will be worth more in the future. And even my friend that I was talking about earlier was talking about getting savings accounts and all this stuff. And I'm like, saving account may or may not be good for you because it depends on what the interest rates are going to be. But if you're just stashing money away in some and you're not really aware of how to save your money, which a lot of people are not aware of, and you're just putting it in just like your average bank's banking account and savings account where you're getting like 0.25% of interest on it or whatever, inflation is at such a high rate, you're actually losing money by leaving that money there. But if you are a person who has, like my friend who has changed jobs and you're thinking about, okay, I'm going to get a bump in money, which by the way is something that you should do because it has been shown statistically that people who change jobs frequently wind up making more money than people who stay at the same job in that same time frame. But if you're one of those people and you're getting into a new job or you're getting into your first career kind of job or your first office job or first professional job where you're likely getting health insurance, you're likely getting a 401k or IRA, one of the first things you want to do is not what my friend said, which was go buy a bunch of stuff and do all, and I need to set up this thing over here. No. Make sure you get your employee match. If you have a 401k that has employee matching, absolutely do that and max that out, because in a year, 2 years, 3 years, which the older you get, the faster that time goes by, you're going to be able to look at it and go, wow, I actually now have this big nest egg of money and I'm glad I did that, as opposed to taking that money and when you get the job and going and spending it on setting up something else that may or may not work out, or buying a TV or whatever kind of crazy cockamamie thing that you might be having in your head. And trust me, I've had them too. Whatever that cockamamie idea is that you have in your head that you want to go take that extra money you're getting now from that new job on, don't do that. 100% commit to your 401k, get employer matching. It's literally getting free money from your employer. It's literally getting a pay raise from your employer, actually, because whatever you put in, they are going to match it up to a certain amount. So they're giving you more money. It's literally free money. And it's free money that's going to likely over time, like I said about the stock market, gain in value as opposed to just storing it away in some 0.025% savings account and losing all of that value to inflation over time. The other thing that you should do, and this is one thing that my friend did say that was actually correct, is paid off your debts. If you've got a lot of debt going on that you're racking up, you want to pay that off because the interest works in the opposite direction of the interest you get from saving money and putting it in a 401k or investing it in the stock market. Debt interest tends to be a lot higher than savings interest, and that interest eats away at all that extra money. So think about it this way. If you're paying $50, $100 a month in interest just because you have an outstanding debt, that's going to keep happening every single month and you're losing that money. So if you pay off the debt, the next month you don't have to pay as much and eventually you won't have to pay anything. And this is something we talk about specifically with credit card debt, that you want to try to get as many of your credit cards down to a zero balance as you can. And in fact, you want to get to the point where you actually have no more than zero on an account balance, maybe a little bit if you have a tight month, but you want to keep it as close to zero, if not at zero, as possible. And with all that in mind, once you've gotten all that kind of set up and you got that kind of mindset down from all of those things, that I'm going to get my employer match, I'm going to go pay off these debts, I'm going to make sure this money is going into the right place and really understand where I'm putting my money, that's the point in time where you can understand and you will start to see. And in this day and age, and I feel over the next couple of years with economies possibly recovering, unless we have some other major worldwide disaster happen again, with economies recovering around the world, you're going to see probably faster returns over the next 2 to 3 years. Again, depending, nobody can predict the future. This isn't financial advice. I'm not your financial advisor. You should do your own research, but I would kind of think that at this point in time, the world's kind of ready to recover. We're kind of tired of all this stuff and people are ready to make some money. The CEOs are already doing it. So it's time for the average person to kind of get in on this stuff and understand even more so now than ever with a global economy, how your money actually works, how money actually works, and the best things to do with it and not push it off to the side. Because some of us, especially my generation, the clock is kind of ticking. We don't have that much more time to kind of screw around anymore and just go, I'll do it tomorrow. Put it to you this way, that tomorrow that you're putting off, the money that you're not making today that you could have tomorrow won't be there. So the more you put it off, you're actually cheating yourself from that tomorrow. So the best thing to do is, again, I understand a lot of this stuff is very confusing and it's a big, crazy world with a lot of words and acronyms. So take a breath, get yourself set up and ready to go. And kind of once you understand these big concepts of how, yes, maybe I'm saving money, but I'm losing actual value of that money to inflation, and maybe it's better to invest it. Getting the 401k match, understanding how interest can work for you and can work against you when it comes to debt. Of course, if you want to get started with that journey and you're not already signed up to a brokerage or you just want to get some free stocks, you can use the links down below for Webull and for Robinhood and get yourself free stocks from either one of those platforms. They could be worth anywhere up to $1,800 in total or a piece or whatever they're giving away this month. It changes all the time, but they're always giving away free stuff. You can also get crypto. If you're interested in cryptocurrency, you can sign up with Coinbase, and Coinbase has got lots of giveaways every single month. Although, again, a lot of people are suggesting it these days with a lot of what's going on in some of the crypto spaces to not keep your money on some of these exchanges. I guess I know I do owe you guys that crypto ledger video that I am going to be doing pretty soon. Once I can figure out how to do it without giving away my information, I probably have to reset and buy a new one and got to do it that way. I might wind up doing that. Hopefully some of those links work out for you guys. You find something of value down there and it can help you get over your investment procrastination and start making that tomorrow today. If you guys like this video, again, please hit the like button, subscribe button, and a notification bell. Be sure to share this video on Twitter, Facebook, Instagram, Reddit, or wherever you talk about personal finance, the stock market, money, and just not procrastinating on things that you know you should be doing anyway. Thank you guys for watching. I'll see you guys here again on Wrestling with Finance. Be safe.